Hey, folks, welcome to our inner circle. Um, this is open mic night for you folks. Whatever you want to talk about, I'm here to talk to you about. Whatever symbols you want me to go over, please pop them in the chat box. We'll talk about them. If you want to talk about our positions, strategy, whatever, I'm here for you. This is your time. Thank you for joining, and we have a few people in here, and I will wait for a couple of more. And while we're doing that, I'm just going to go through the futures action and talk to you about our options positions on NUGT. We have two sets of options contracts which will be expiring tomorrow. We had the 40 strike, which we opened up was it last month or earlier this month? And we will see those options expire, in all probability worthless. We have the 30 spot 50 contracts. Those covered calls will expire worthless, in all probability as well. I mean, we closed out the day at 28 spot 63. I doubt we're going to pop up higher tomorrow. You never know, especially with a leveraged ETF. Now, what I do like today about Nugget is that we finally broke out of this channel, this downtrend channel, which formed not yesterday, but the prior Thursday. And we've been consolidating sideways. And last night, or actually after hours last evening, we broke out. And then we pulled back this morning in the pre-markets, did a retest, did another retest at the open. It held, we reversed, and now it appears as though we're going to begin to break out of this channel. So what I want to do here is I want to be careful with selling covered calls that are near the money. What we want to do is this. This will be my strategy moving forward for NUGT. You should expect to see gaps up higher, and I'll be looking for gaps up and into the upper band of the third standard deviation Bollinger Band on a 4-hour basis and on a daily basis. And once we spike up and above those Bollinger Bands, what we'll do is we'll look to sell covered calls. Now, will we wait for expiration? In all probability not. We'll sell the covered calls and look to buy those calls back at a lower price, scalping the profits. So expect that in the near term as we begin to break out even further on NUGT. And for those that are just joining in, I'm here for you. It's open mic night. For those new, enter your symbols in. If you want me to go over them for you, I'll go over them in great detail. And if you have any questions with regard to our strategy or a question about our positions, please let me know. This time is yours. And just pop those symbols in there or questions, and I will definitely get to you. I'm going to keep going over the futures here, and I may go over to a daily chart of NUGT to check out price targets of where we might want to sell covered calls on a spike up higher, because I want to sell those covered calls into resistance levels. So that way, suppose we don't get that pullback. Well, we don't want to have the shares called away from us. So I want to sell the covered calls at resistance so that when the shares, if they continue to move higher after we sell the covered calls, they'll struggle to try to get through resistance, and that'll slow it down a little bit. Hopefully we get a pullback, or if we pause at that resistance levels, those options stand to expire worthless. That's just like knowing exactly where our resistance levels are. Barone, hey! How'd you do today? Did the information on the options help you? What are you going to do with Schlumberger? We'll go over that chart for you, okay? What are the resistance and support levels on NUGT? I'm going to go over those, definitely. It's so funny. You must have just joined. I just said that. Good to hear it. So Barun was He sold covered calls on Schlumberger, right? Schlumberger, SLB? You bet. Option 2. All right, so you're going to sell a put. You're going to allow the shares to be called away from you, and you're going to sell a put. No worries, pal. I'm glad you're here. Okay. We'll go over SLB. We'll go over NUGT. Cool. All right. We'll talk about your trade as well so other people can learn from it. Because in 2020, we're going to be talking a lot more. I've been talking to people that matter to me in terms of business and the markets. And, you know, I had one gentleman. Great. I'm glad you're doing well with it. And we're going to do more of it in 2020. That I can assure you. I had one gentleman that is a kind of a mentor of mine. And he says, you know, Bob, I watch your videos and you talk about these other YouTube channels that have a huge following. The difference between you and them is that they're day traders, and the demographic is that they're younger. They're much younger. These people, and they don't have the patience nor the bank account to trade the way you do. So it's difficult. So my audience is a bit thinner, but he suggested, and I was already leaning towards it, but he only validated the thought process I had going into 2020, and that was to focus on cryptocurrencies. That's not heavily focused on. There are a number of channels out there, but it's not saturated. And also using covered calls to generate income, using puts to generate income. Not necessarily to speculate, but to hedge your positions and to generate cash flow. And that becomes all the more important as yields stay low where they're at, especially for those that are on a fixed income. How are you going to generate income? Covered call strategies are great. Selling put rights are a great way of generating cash flow. So we're going to be doing a lot of that in 2020. So stay tuned, and it's going to be a good year. 2019 was a very good year. We went into it bullish on gold. The miners had a very good year. It's poised to finish off fairly strong. And in terms of covered calls, we made a killing in 2019 on covered calls. Yeah, we could do that. Yeah, integrate the dividends along with the covered call. Yeah, I like that idea. Yeah, that's a good idea. So you get the dividend capture and you're collecting premiums on the covered calls as well. That's a good strategy. I'll take you up on that. That's good stuff. Yep, we'll do. Okay, so we have Barun in there. We're going to go over SLB, NUGT, resistance levels at which to sell covered calls moving forward. And if anybody else is out there, please enter your symbols in and we'll go over them. Let's get to it. I have no time limit with members. I'll stay here all night long. As long as you guys want to be here, I'll be here. I value your time. I appreciate the time you're spending with me. So whatever I can give back to you, I'll certainly do that. So let's talk about first getting a sip of water. Okay. So let's go with NUGT. Okay. So what we're going to do here, I'm going to use a daily chart because the reason why I'm going to use a daily chart and combine the daily chart, and this is the beauty of Trend Spiders, I can overlay monthly and weekly resistance levels to help us out. So let's overlay weekly. So in dash line, we have weekly support and weekly resistance. In solid line, we have daily resistance. We also have some horizontal resistance levels as well. So me personally, were we to break out on a 4-hour basis, I would be looking at two resistance levels to sell calls at. Only the weekly strike price, okay? Only the weekly strike price. Unless, of course, we become very overbought on a daily basis. Okay, I'll talk about that in a moment. But right now, we're going to talk about gaps up on NUGT and up and into the third standard deviation Bollinger Band in particular. So where would I want to sell a covered call? The 3250 strike price is interesting, but I think we're going to get there pretty quick, especially if we gap up and into the third standard deviation Bollinger Band. I don't know whether or not I'd want to sell an at the money at that point in time covered call. I may. It depends upon what bonds are doing. It depends upon what the dollar is doing. I will probably go with selling the covered call up here at this daily resistance level. Remember, this is a 4-hour chart, daily resistance overlaid in dashed line. And I would probably hit, I would see what the price is at, because I don't want to lose out on much upside potential on the share price. The 34 strike price, the 35 strike price expiring on a weekly basis. So I like at current, if I was going to sell covered calls prior to a gap, I like 32.50 is my strike price. After that, if we do gap up higher, I like the 34s and the 35 strike price on a weekly basis. But I don't want to hold till expiration. Once we get a pullback off of that third standard deviation Bollinger Band, I want to scalp the position. I want to scalp the profits, put them in my pocket, then allow the shares to move up higher. Then, if and when we gap up higher, yet again, we sell the covered calls. We get a pullback, we pull our money out. That way, we're taking advantage of the upside move in NUGT, and we're not putting a lid on our upside potential using covered calls. We're only selling covered calls on big strength, on an overbought condition, expecting a pullback from which we'll book our profits. Does that make sense to everybody out there? Hey, Jerry, does that make sense to everybody out there? Are you listening while you're driving? That's great. Good for you. Going to your son's concert? I miss those. You know what? When I had to do them, I enjoyed it to a certain extent, but you know what? I wanted to be doing other things as well. Now, in hindsight, I miss them. I miss them because now my kids are away at school. Well, my daughter's home now. My son's coming home this weekend. So enjoy it, Jerry. All right, so that makes sense? Good. Okay, just want to make sure. And if I lose you, please stop me. Tell me to backtrack, clarify. I'm here to make sure that everybody understands what we're doing, what the strategy is. So now going to a daily chart, the strategy moving forward. And I'm going to bring you up a couple of charts from 2015 to 2016, and I will show you exactly what I was doing back then with covered calls and selling puts as well, because I got NUGT called away from me a couple of times, so I had to sell puts to get back in. I'll talk about that in a moment. All right, so here's the daily chart, and as you could see, if we open up flat next week, which we probably will, I'll look to sell the 32.50 covered calls. But I don't want to go down into the 20s anymore. I would rather sell at the minimum $30 contracts. And if I can get a bid, 7 cents a dime, whatever, not too much, I don't care. I'll still bring in a couple of $100 as long as I don't get called out. I want to avoid having those shares called away from me. Like fellow member Patrick, he sent me an email earlier, and he goes, I bought 1,000, it was like something like 1,000 shares of NUGT, and he sold at the money covered calls. And he says, I want to get called out of them. And he did great today. He's going to get called out. The shares went up. He made money on the net asset value appreciation and on the premium. That's his strategy. That's not currently my strategy, right? So they're both great strategies, but you need to he's longer term of NUGT as well. He put this trade on as a spec, and he did well with it. So congratulations, Patrick. All right, so on a daily basis, I'm looking at the 32.50s as a strike price. Were I looking to sell puts to have the shares put to me, I would look to sell the 28 to 27.50 strike price. And that will, the premium that I bring in, let's say I bring in $1 and I sell the 28.50 strike. Well, my basis cost is going to be 27.50, even though the shares are put to me at 28.50. Does that make sense to everybody? And I'll wait for a reply. I'm going to keep going. So on a daily basis, assuming that we don't gap up tomorrow or Monday, we'll sell the covered calls going out to 30 to 32.50s to generate a little bit more income. And then after the first of the year, I want to step back because seasonally, January is a very, very bullish time for gold. We need to know that going into January. Now I want to take you back in time to illustrate for you exactly what I was doing on NUGT when I first started trading it. And that was in 2015. I can't believe it's been so long. You can see I already have this set up. Okay, so here is a chart of NUGT back in 2015. Now, the Federal Reserve going into 2015, right here, right where this arrow is, raised rates. And shockingly, the price action for Nugget was not negative initially. It did pull back, and then we spiked up higher going into 2016, despite the fact that the Federal Reserve had just begun to tighten rates. And you could see that we began rallying after a sell-off in January. We rallied up into the third standard deviation Bollinger Band in red. It rallied up again into the third standard deviation Bollinger Band. We sold covered calls. And we got a pullback. We scalped those profits. What happened thereafter? We resumed the uptrend up here, tapped that third standard deviation Bollinger Band. What do? We sold the covered calls. It pulled back as expected. We swiped our profits, took them out, held on, rallied yet again, hit the third standard deviation Bollinger Band. And this is where I may have been called out. And I was selling puts to get back in. It was one of these events, one of these times here, either this one or this one, where I got called out and I was selling puts to get back in. And ultimately the shares were put to us. But the strategy was wait for an overbought condition relative to the third standard deviation Bollinger Band, sell the covered calls that could be at the money or just out of the money, allow the shares to pull back, scalp the profits on the covered calls, then the shares can move up higher, rinse, wash, repeat. That's the strategy. I hope that makes sense to everybody. Chinese New Year. What do you mean by that? Is it going to be the year for China? It could be. The way this trade deal ended up, not good for us. I'm not happy. I'm not happy at all. Okay, so that's the game plan. Let's move back to talking about support and resistance levels. SLB, I'm going to bring up fellow member Barun, who is with us now. Why do gold prices go up in January? I think that to answer your question, I don't know. I can speculate, right? That's about as honest as I could be. I can speculate. I think the reason is that going into the back half of the year, you have risk on, right? You have, at the beginning of the year, people that are looking to book profits. So they don't have to pay taxes in the current tax year or the prior tax year. They book profits in the new tax year. And what happens to that money? It finds its way into gold. Gold moves up higher. Excuse me. Oh, I see what you're talking about. Yeah, I don't know whether... Maybe it could be for all I know. I'm not big into seasonality except for respecting it, identifying it, and respecting it. Not so much about the whys of as to why it's doing it. Maybe I should, but I'm not 100% on it. I know Indians are, meaning the country of India, not the American Indians, are huge into gold, and they have a seasonality effect over there as well. So, getting back to SLB, if you are called out, the 37.50 strike looks very, very attractive. And I think you sold, if memory serves me correct, Barun, you sold the 37.50 strike price? I think that you... I see. Okay. Okay. That makes sense. Okay, cool. All right, so I think you're in a good spot. So Barun sold. You mind me asking your basis cost on SLB? If that's okay. So Barun sold the 37.50 strike price covered calls generating income and around 41. Oh, so your basis cost is higher than where you are at right now. Gotcha. Now I understand. Now I understand. Okay. Gotcha. All right. So you may want to think about doing this. Is and I have to say this: consult your financial advisor or tax advisor. But if you get called out of that SLB trade, you'll incur a loss because obviously your basis cost is at 41. You're going to get called out at 37.50. So what you may want to do is rather than sell a weekly put, you may want to go out 30 days because you avoid the wash sale rule, meaning if you buy that stock back within, so let's say you sell at 37.50 on a weekly basis and those shares are put back to you the next week, well, that's a wash sale. You don't get the tax advantage of taking the loss. However, if you wait 30 days and then have those shares put back to you, then you get the tax advantage of taking the loss. You take that off your income taxes as a loss, but now you're still back into the share price, possibly at the 37.50 if it's put to you. At the worst case is that you have premium that you collected on that trade, if that makes sense. Good. I'm glad it helped. So check with your financial advisor, check with your tax planner. Just make sure I'm accurate, okay? I'm not licensed, so I just want to put that out there, okay? So yeah, me personally, that's what I think I would do. And I would ask him about the wash sale rule and if that would apply. That strategy. Okay. So SLB, I'm liking here. You're seeing a lot of topping action. I think you're probably going to get a pullback here on SLB. I'd be watching. I'm going to share this chart with you. We'll see what happens here. I mean, the energy sector is showing some topping action. Why didn't this alert fire? Oh, it's there. Okay. It's not purple, though. All right. So the alerts look different tonight. All right. So I'd be watching for a break of that support level here. And I would, if the shares are going to break support, they may just come to you anyway, and you want to sell the puts at a lower price if possible. And ideally, you sell the puts at the 37.50 strike price if you want to wait 30 days to take them back in and just take the tax loss. Or you could just buy the shares back, one of the two. But I think that there's a good chance we pull back, we do a retest here. I don't see any rush next Monday to go selling your puts unless, of course, we begin to break out. Now, if we begin to break down, let it come to you. You get paid a bigger premium. All right, so the other question was about the spiders. Good. Glad, Broom. And so in terms of resistance above, there is none. Right? We're at all-time highs. We have begun our approach to going parabolic. So what I would do here, if you really wanted a resistance level, this is it here. That's at around the 3,300 level. But unless you have a big account, you're not going to get a lot of premium by selling those contracts at the $330 level on the spiders. I would use my Bollinger Band. If you want to use the third standard deviation Bollinger Band, the top of that band as a target, or maybe just shy if you want to use a 2 standard deviation at current. The upper is at 324. Where do we close out the day? 321 spot 1-2. That looks interesting for if you don't want to get called out of your spider position and you want to hold, but yet you want to collect a premium. Target, use the rising upper band of your Bollinger Band. Either use a 2 standard deviation or a 3 standard deviation. I would still like to capture as much upside here as I can on the share price. So I would probably go with the 3rd standard deviation. I'll settle for a smaller premium. If you want a fatter premium, use a 2 standard deviation Bollinger Band. And let's see if I can modify this. So deviation up is at 3 at current. Let's change it to 2. And we're right there already. So we closed right at the 2nd standard deviation Bollinger Band, the upper Bollinger Band. So we're probably going to get a pullback fairly soon. So if it's a matter of collecting premium, just go slightly out of the money and then bring in that premium. If you still think there's a lot more upside potential here, then go with the 3rd standard deviation Bollinger Band with the strike price at 324, thereabouts on the spiders. So you're looking for protection from a market downtrend. Yes, I have most of my 401k in spiders, but do you have option right authority on that 401k? I'm going to change this back to 3. Okay. Okay, so we went over Nugget. We went over the spiders. Did I answer all your questions on the spiders, Barun? Oh, but in your personal account, it's SPY. Okay, good. Good. Yeah, I'll do a printout here. Right, that's what I figured. Yeah. Those are the 2 charts for you. Let me just scroll back up here to make sure that I didn't miss anybody. I think Jerry's driving. I'm not sure if he has anything he wants me to go over. There are a bunch of people on. If you want me to go over anything, folks, I'm here for you. This time is your time. I'm more than happy to spend the time answering your questions. Okay. Looks like we're dying down here a little bit. Somebody just joined. I'll wait to see whether or not they have any symbols for me to go over. I hate to cut somebody off. And while I wait, because there is a lag between when I speak and when you folks hear it, I'm just going to bring up the futures here. Yeah, I do still own XRP. I forgot all about it, to be honest with you. But yeah, I still have XRP. It's not much. I haven't even thought about it all that much until I went into Coinbase the other day, and I bought Bitcoin. I'm like, oh yeah, I still have the XRP, but I haven't paid attention to it. I don't know. I didn't open up a big position in XRP because 2020 is the year I really go. He's laughing at me. It's the year that I really learn about crypto. I have people that I rely upon for information, like Mark Andreessen. If you ever want to learn about cryptos, go to YouTube, type in Mark Andreessen cryptos. He's the founder of Netscape. And if you folks out there that aren't old enough to remember, Netscape was the first internet browser. This guy built it out of his garage, and he beat Microsoft out with Explorer. And they eventually just tried to destroy the guy. But he's a genius. Hey, TA. Welcome. You got anything for me to review? Or are you just saying hi? Just checking in. So this year is going to be the year of learning cryptocurrencies and XRP. The reason why I liked XRP, and I just wanted to buy some just to have, is because what they're doing is different. And I related to this because they're not fighting the federal government. What they're doing is they're going to the government seeking regulation. And they're playing within that framework of the web that's being weaved for them. And XRP is very, very good at sending money, large blocks of money, between institutions in seconds. Bitcoin can't do that yet, from what I understand. This is what I know, and it's not much. All right, so, well, welcome, TA. Welcome. Great to have you. So that's the reason why I wanted XRP. Just in case, really, just in case it just started to take off because of adoption. And I just want to have a piece of it. Okay. Nugget, I went over a little bit earlier. If you want me to go over that again, I could, but I'll go over silver at current. Let's take a look at silver, and I'll let you check out NUGT on the replay. It was the first symbol I went over on tonight's commentary. Let's talk about silver. Most of what we talked about tonight. Oh, okay, good. We broke out today on silver. So this is the SLV. We broke out on a daily basis. I think we're going higher. Let's use raindrop charts. Yeah. In purple, it represents indecision. And we had indecision at resistance, and we broke out above it today. RSI is hooking up. Very, very nice. Very, very nice. Let's go to a weekly chart. Yeah, nice week here. We held support, which we broke out above last week. RSI is looking okay, not wonderful. We're still trending down here. That needs to get resolved. So I think that what we're seeing on a daily basis is what I like to call technical healing. We're holding support here. We're looking for a breakout on RSI. We have a lot of resistance up here. Let's just use 1612. There's a lot of resistance up here. I already have it set up, so I might as well just stick with it. 1612 is a resistance level. I would like to see next week a pullback. If we break out above this upper band of resistance this week, a pullback and a retest of 1582 on the SLV. That looks very interesting as an entry point or a place to add more. Going at the USLV. Again, we have a lot of resistance up here on silver. I think let's figure this out now. 84.22 on the USLV, a close above that level. That sets us up for a run up to this upper band of resistance here in green. So we'll be looking at a 90 handle on USLV like that. If we close above the support level or resistance level at current. Germano, how you doing, buddy? What is your view on the euro versus US dollar next year? What are your critical watch levels? Okay. What charting software do I want to use? Let's go with first we'll go with the dollar overview relative to a basket of currencies. So we're going to go with the dollar macro view all in. Then I'll do a deeper dive into the dollar versus euro on Thinkorswim. As a matter of fact, I already have it up here. I think that what we're going to see in 2020 is the president hammer away at the Fed chairman in an effort to get him to kill the dollar. Sorry about the silence, folks. I'm trying to find a specific chart. Here we go. Okay. All right, so this is a quarterly chart. Of the US dollar. $5X? Wow. What's that like? I couldn't even imagine. I'd love to see a chart. Is that the symbol? Wow. All right, so the dollar at current, we broke out above resistance, which acted as resistance for 1, 2, 3, about 4 quarters. How would I like to have a 5X on GDX? I don't know if my heart could stand it. Side note, this is from Terrence. Side note, you mentioned trading with Robinhood for trading Bitcoin. They were in the news today. Yeah, they I read that. They screwed their customers. Yeah, what they were doing was they were allowing banks to front run their own customers' orders. That's pretty bad, man. That's bad stuff. I'll check it out, Germano. It's on the Milan Stock Exchange. I don't know if I get that. Let's trade it. Maybe on TradingView they may have it. I'll check it out though. Yeah, TA. Yeah, that's a great point. Very, very bad behavior out of Robinhood. Very bad decision to do that. It's shocking, to be honest with you. But you know what? Nothing shocks me anymore. I think I just say that for dramatic effect. Nothing shocks me anymore. These guys are just crooks. They're just crooks. All right, so we broke out in Q3 above resistance. At current, we're struggling to hold on to this breakout point. So if we fail to hold 97.50, we're down below it right now. It looks as though we are going to move lower. And if we are looking for a price target, I'm looking at 94.12 on the US dollar to head down to. So that's a fairly sizable move. Stokes appear to be flattening out and rolling over. Me personally, I think that the big rally in the dollar is over. The best that can be said for it's the least dirty shirt in the room. If you take a look at it on a monthly chart, Stokes are breaking down. Williams percentage R is breaking down. Lower highs, lower lows. And here is the pimp Mac Daddy of them all. We are breaking down and we'll probably close out the month even weaker on the dollar. So here we are. Here's the lower band of support. We broke down below that lower band of support, which began almost 2 years ago now. In early 2018, this rally appears to be over and done with. So I'm bearish on the US dollar. Hey, Norris, CRZO, you got it. Hey, Tom. So I'm bearish on the US dollar going out and into 2020. Assuming that we close where we're at or lower by the end of the month. Weekly view. We're up on the week. It's showing a respectable bounce back. But I think it's too little too late. Look at this lower high here. Look at this. Stokes are horrible. Horrible. I think we break. Now, the euro US dollar trade is going to look a lot the same. I mean, the euro makes up 55% of the Dixie, which we just went over. So as goes the euro, inversely will probably go the US dollar. Now, the euro broke out here back in October, rallied, broke out and above this upper band of resistance here. But that breakout failed. Right? We had a breakout point failure. We're struggling to fight back right now. If we close out the month above this upper band of resistance, the euro will probably make an attempt to try to take out this resistance level here. If it does, the euro is going to go a lot higher. I'm not overly bullish on the euro in any way whatsoever due to the fact that in all probability you're going to have a Brexit this year, whether it be negotiated or not. It's probably going to happen this year, and it may just throw the euro into turmoil. So if anything's going to help salvage the US dollar in the short term anyway, it's going to be a Brexit. So that's the 800-pound gorilla in the room. Now, the currency to watch is going to be the yen. The yen is the second largest trading component in the Dixie, second to the euro. So the euro may just trade sideways with a bias to the upside. Doesn't have to move much. But if you have the yen breaking out, that'll provide the rocket fuel for the Dixie to send the dollar lower. Okay? But you need both the yen and the euro to trade in at least not down with a bias to the upside. It doesn't have to be huge, but that'll take the US dollar down. Especially if commodity prices continue to rise, that means that the smaller components of the Dixie basket will do well. Brazil, Aussie dollar, Canadian dollar. As those commodity currencies gain in value, that you're less reliant on the yen and the euro to force the dollar lower, if that makes sense. So we are at current struggling to break out. This is a weekly chart, struggling to break out on a weekly basis on the yen. I think that ultimately within the next couple of weeks, we break out on the yen. And I went over this a couple of weeks ago, the charts of the Nikkei building nicely, a right side of a base. I think that the Japanese markets are going to be interesting for the next year or so, and perhaps even longer. God bless you with those 5X, man. So hopefully I answered your question with regard to the dollar and the euro. I don't expect a stellar year for the euro, but all it needs to do is not go down for the dollar to get hurt, because the yen is probably going to break out and those commodity currencies are going to do well in a rising inflationary environment. Let's go to CRZO for Norris. I think I had that saved for you, Norris. I do have it saved. I got an alert on this one. That's right. We broke out. Why is this not leaving? All right. Okay. Anyway, I'll fix that in the back end. Nice breakout today. Very, very nice breakout. You long, Norris? There we go. Probably clicking the wrong button. There we go. Okay. So we have our breakout. You bet, Romano. Not yet? All right, so we'll talk about an entry point here. And this is a weekly breakout, no less. All right, so that's CRZO, Tom. CRZO. We'll keep this active. All right, so this alert, the strategy here, Norris, would be we want to know when we get our pullback and a retest of this breakout point. It could be 2 weeks from now, it could be 3 weeks from now. But that would be the best risk-reward entry point to buy CRZO at current. So that's set. And the reason why I would show a lot of discipline with that entry point is because what you're seeing here is a lot of resistance immediately above, right here. So these guys want to get made whole, and they're going to sell. RSI broke out. Stokes broke out. Very, very good stuff. Correct. Daily chart. My mouse is stuttering here, okay? Yeah, so you're seeing a little bit of topping action. I would allow for that pullback. You're probably going to get it. 799 is fairly decent support. But ideally, you get in down here at the breakout point on CRZO. Now, the reason why you're probably going to get that pullback is that if you look at the XLE, watch this, it shoots up higher tomorrow. You have, here, we'll even go back here. Resistance right up here. It was resistance. Oh, support back here in September. Resistance in November. This is the energy ETF. And you're already seeing topping tails at this resistance level. So I wouldn't go buying at current because you're buying right up and into resistance, not only on CRZO, but on the sector itself. So just be careful there. Okay. NBIX. And we'll leave off with NBIX. Avoid. You got to avoid it. The reason is that we broke down below support this week. You do have some support levels below. Right where we closed today is a support level. But this is a very, very critical support level that we broke down below. Where are Stokes? Stokes are okay. RSI's all right. Declining, but they're not really weak. Let's overlay the monthly support and resistance levels. All right, so plenty of room to the upside here on a monthly basis, a lot of room to the downside. Let's take that off. Now, if we close out the week back above the support level, then I get excited about the chart. That would be sexy stuff because we pulled back, tested the support level, rallied back to close back above support. Let's drill down. Let's see if we're going to close out that way. We may pop tomorrow here. This is a spinning top formation. My guess is that our resistance level, let's go to overlay a weekly resistance level, coincides Yeah, you need a fairly sizable rally back. Where's this price? 108.90. Let me validate this. Yeah. That's a pretty hefty rally back. You need to close above 108.90 on a weekly basis to get long of this. For a short-term swing trade, if we break out sometime next week above this upper band of resistance, you could buy it as a swing trade, but I wouldn't stay long if we close down below weekly support. I would be very, very respectful of that breakdown. Because again, if we break down to new weekly lows, we're coming down here to 98, about 99, well, no. About $100 a share. That would be the next support level below where we're at right now. So just watch for a rally back. If we get that rally back and a close again, back above 108.98, then I would be very attracted to getting involved with the shares. So, and I think it may happen. You may get that with that daily setup. It kept going and going until finally it's pulling back to think about a good entry point. Yeah, I think I just outlined it. 108.98 is an investment. That would be a good entry point as a short-term swing trade. A close above 107.95. That would be a good entry point as a swing trade. Heck, you could buy it where it closed today, but that's betting that the shares are going to break out. So you need to use a tight stop on a new daily low, because if we take out today's lows, in all probability, we're coming back down here again to the $100 per share mark. So the risky play is to buy where we close today. If you get that opportunity tomorrow, use a tight stop. The more conservative play is pay up, wait for the breakout, show patience, buy on that breakout, and then look to sell at weekly resistance, which is at about 108.98. Right about here. Right there. So there's not that much room to the upside, to be honest with you. I would really defer to that weekly chart. I would want to see a rally back above this level. I'm beating this chart to death. This level here, 108.98. I would need to see a close above that level or higher to get involved with these shares. On a daily basis, just not enough room to the upside to profit from between weekly resistance and where you're buying. That's just me. You bet. Anytime. Yeah, Norris, NUGT is looking really good. Yeah, it's been behaving very, very well. I agree. And gold really started flashing signals the other day because NUGT was weak and it was NUGT was down over $1, and gold was down like 50 cents. It held up on a weekday for bonds, a strong day for the dollar, but gold really held in there. So I think the whole sector is looking really good for a rally in January. Bob, the old chart of NUGT a few years ago back you showed earlier, can you please make NUGT go back up over 130? That will make you so happy. You and me both, brother. You and me both. Fingers crossed. 2020. 2020. All right, folks, if there's nothing else, I'm going to say goodnight to everybody. And everybody have a great night. If you guys are checking out, you're not going to be around watching or trading the markets, please, everybody have a really great Hanukkah, Christmas, New Year, and just enjoy the time with your family. Thanks very much for spending the time with me tonight. It was great bantering with you guys. I always get the biggest kick out of it. So thank you very much for giving me the opportunity to do this. Happy holidays and have a great night. Be well.